Okay, so for the past few years, something huge has been happening kind of behind the scenes of the global economy. China is quietly trying to pull off something that hasn't been done in modern history. They're trying to relink a major global currency directly back to physical gold. Basically, they're trying to rebuild how money works from the ground up.
So you gotta ask, why now? What's the big rush? To really get what China's doing, we have to start with a more basic question. Why are countries all over the world suddenly scrambling for an alternative to the US dollar? Well, it all boils down to one simple word: trust. Or, a sudden and massive lack of it. The event that sent a massive shockwave through the entire global financial system was this number: $300 billion. That's how much of Russia's foreign reserves the United States just froze in 2022. Now, politics aside, that single move was a gigantic wake-up call for every single central bank on the planet. That one action created this deep, deep crack in the trust that the entire global financial system was built on for decades. And you better believe countries all over the world started asking a really uncomfortable question. Hey, if they can do that to a nuclear power like Russia, what's stopping them from doing it to us if we have a disagreement with the US?
And this quote just nails it, right? The signal sent to the world was crystal clear. Those dollar-based assets you think you own, they can be seized, they can be locked, they can be switched off with the click of a button. They're not yours, not unconditionally.
So what do? Well, the only logical response for a lot of countries, especially the emerging markets, was to lower their risk. So they started selling off US government bonds and buying something they felt they could actually own. Something real, something physical, that no single country could just switch off. And that something was gold. Which, of course, brings us to the main character in this whole drama, because no country has jumped on this new reality harder or faster than China. For the last several years, the People's Bank of China has become the world's #1 absolute biggest buyer of gold, and it's not even close. If you look at the chart, for years and years, China's official gold stash was just flat. Nothing really happening. But then, right around the time the US started talking tariffs, boom, the buying just explodes. And here's the key: they're not doing this in secret. This is a very public, very visible pileup of gold, and it's designed to send a clear signal to the rest of the world that, hey, an alternative to the dollar is here. Now get this. The official number from China's central bank is that they hold around 2,300 tons of gold. But almost everyone from Bloomberg to JP Morgan estimates the real number, when you include gold held by state-owned banks and other funds, is way, way higher. We're talking closer to 5,000 tons. Okay, but here's the thing. Just piling up a mountain of gold isn't the end game here. That's just step one. The real game changer, the revolutionary part, is what they're building on top of it. A whole new financial system designed to make gold a working asset, not just a shiny rock that sits in a basement. So how in the world do you make a lump of metal a working asset? It all starts with boring old banking rules. See, gold used to be a Tier 3 asset, which meant a bank could only count half its value as real capital. But under new global rules called Basel III, it got a huge upgrade to Tier 1. Now it's valued at 100%, same as cash. The final step, the holy grail, is getting it classified as a high-quality liquid asset, or HQLA. Once that happens, banks can use gold as collateral for loans. The very bedrock of our entire financial system. All right, so China had this big plan. They wanted to get other big countries like Brazil, India, and South Africa to use their currency, the yuan, by making it convertible to gold. But those countries immediately hit them with a familiar problem. They said, okay, if we convert our yuan to gold, where's the gold stored? And when China said, in China, the answer was a hard no. I mean, think about it. They weren't about to swap one central gatekeeper they couldn't trust for a new one. And this is where China's solution is, frankly, pretty brilliant. It's called the Gold Corridor. And you can almost think of it like a Fred Flintstone blockchain for physical gold. It's a network of vaults in different countries, all connected to the Shanghai Gold Exchange. Every gold bar is tracked, its purity is verified, and its ownership is logged. It completely solves the trust problem because no single country is holding all the keys. It's decentralized custody. So, what does all this add up to?
Well, for the first time in a very long time, it makes it possible to build a parallel financial system, a whole network for trade, for loans, for development projects that operates completely outside of the US dollar and Western institutions like the IMF. A parallel financial universe, really. Let's make this real. How does the system actually work? Okay, imagine an African country that has a ton of gold in the ground, but no money for infrastructure. Under this new system, they can take their physical gold and deposit it into one of these network vaults. The BRICS Development Bank then loans them yuan, using that gold as collateral. And with that money, they can build roads, ports, power plants, and the entire deal, from start to finish, happens completely outside the US dollar system. So you've got to be asking, is the US just sitting back and watching all this happen? Well, not quite. You might remember seeing news stories about the US moving its own gold out of vaults in London and bringing it back home to America. Yeah, the official story was something about tariffs or audits, whatever. But the real reason? It's pretty likely the US sees this new system being built and wants its own physical gold safe and sound back on home turf just in case. And just stop for a second and think about the sheer economic force of this. Right now, most big global institutions hold about 20% of their reserves in hard assets like gold. New guidelines are suggesting that number should be closer to 30%. Now, a 10% shift might not sound like a lot, but when you apply that across the entire global financial system, we're talking about a potential $2 trillion tidal wave of new demand crashing into an asset that, remember, we can't just print more of. All right, for this last part, let's zoom way out, because what's really happening here isn't just about the US versus China. This whole situation is setting the stage for a much bigger competition between two totally different ideas about what money should even be in the 21st century. So on one side of the ring, you've got the China and BRICS model. It's money backed by physical gold, trust is based on thousands of years of history, it's centralized, and it's built on hard collateral. And in the other corner, you have this potential Western model that could emerge. Money backed not by metal, but by decentralized technology like Bitcoin. Here, trust is based on pure math, on energy, and on open networks that anyone can use. And that is what makes this moment in history so absolutely mind-blowing. For almost a century, there's been one global standard. End of story. But now, we're walking into a world with competing monetary systems, and for the first time, governments actually have to compete. They have to prove that their idea of money is the better one, the more trustworthy one, the more useful one. So that's where we are, and it leaves us with this one massive question as this global chess game plays out. As we finally move past the era of total dollar dominance, what's next? Will the future of money be built on an ancient metal forged in the heart of dying stars? Or on modern math, secured by pure energy and computation? That just might be the choice the world is about to make.